You are listening to chartingwealth.com for Wednesday, the 28th of February, 2018. We see the S&P 500 down big, 1.25%. The Qs, that's the NASDAQ 100, down 1.24%. TLT 20-year bonds down 0.14%. And gold down big, also 1.04%. Let's jump first into the S&P 500. We see that the weekly chart, of course, has been in a confirmed down move since a crossover going down back on the 9th after that big down week. That's the 9th of February, had a weekly vertical crossover going down. But since then, the market has been moving up. And so far, over the course of the week with our Heikin Ashi candlesticks, remember those are calculated differently, 64,000 people have listened to our Heikin Ashi training. If you're not one of them, please go listen to that. You can find it at our Charting Wealth YouTube channel, at our chartingwealth.com website. It is the best training I think we've ever done. We love Heikin Ashi candlesticks, means average pace in Japanese. Really helps you follow price movement, calculated differently than your typical Japanese candlestick of open, high, close, and low. And we get questions about it all the time, and I will tell you that the closing price at the end of the day is actually different than the real closing price. Why? Because the closing price in Heikin Ashi candlesticks is the open, high, close, and low divided by 4. So when we're looking at an up move, it's always going to be lower than the up move itself. If you're in an up move and you're trying to track it, the nice thing about it is it's actually going, the real price movement's going to be higher, and in a down move it's going to be actually lower, which means, of course, it's a good way to practice. You can always look to the far left of your screen. It's actually outside if you're using the type of trading software that we use. TC2000 is the paid service. freestockcharts.com is the free service. It always does list. You can set it up on the far left of your screen to set up the actual closing price. But again, we only got 10 minutes to spend with you, so we don't try to make it any more complicated than we otherwise have to. But what do we see with the Heikin Ashi candlestick so far this week? We see a green up candlestick with a long wick on the top. Derivative oscillator still headed down. Price percent oscillator headed down. What is the main indicator we look at? Is it the Heikin Ashi candlestick? No, it's actually the price percent oscillator. And that is what is heading down, particularly with that strong down move. We'll see more. And again, remember, Heikin Ashi showing you the average pace is up. Now, Heikin Ashi is one thing. Our primary indicator, the price percent oscillator, is another, and you'll see how this plays out as we keep going through the charts. So we see charts still in a confirmed down move on the weekly chart. We go to the 2-day chart. It's still in a confirmed down move, but we can sort of see more the sideways slide for 6 days of movement. And then over the course of the latest 2-day candle, it is an up move, even though the day was down. Derivative oscillator losing downward momentum. Price percent oscillator actually is headed up toward the red signal line. No crossing yet. As we go to the 4-hour chart, we see a little bit more. What do we see? We see that there was up movement in the morning on price with our Heikin Ashi candlesticks actually going above where things went in the prior afternoon with all the up movement over the course of the day. On Monday, the 26th, we see on the 27th, what we had happen was up movement in the morning and then down movement in the afternoon relating to that loss. What we're looking for, friends, is this 4-hour chart. Is it going to cross over going down? Derivative oscillators lost upward momentum. It's losing it. It had been building it over the last 2 days. Actually, yes, over 2 days, starting in the afternoon of Friday the 23rd, and then following on Monday and Tuesday morning, and then started losing it precipitously in the afternoon. Now, we shall look and see what we see over the course of the day on Wednesday the 28th. If we do have a crossover going down, my friends, that is your pull point for a down move. Why? Because the 2-day chart's in a confirmed down move still, even though it's weak right now. But if that 4-hour chart rolls over going down, that'll be your trigger. And of course, the weekly chart is still in a consistent down move, even with the price moving up. That's what makes it so fascinating what the price percent oscillator shows us. We also have a great training on the price percent oscillator you can find at our YouTube channel and at chartingwealth.com, the website. You need to understand this, very similar to the MACD, but different in that you can compare it stocks with indexes, indexes to indexes. We like the price percent oscillator a whole lot more. We explain it much better. We also, one of the chapters in our book, I think it's chapter 6, it's also available online, particularly at our YouTube channel. You can listen to that. I believe that's the one on the price percent. It's either chapter 6 or 7. I think it's 6 on the price percent oscillator. We'll move a little more quickly. I know we only ask you for 10 minutes. Don't want to jam everything up on the S&P. What do we see? We see a little bit of a different scene on the NASDAQ 100 is represented by QQQ. Still have downward momentum on the derivative oscillator, but the price percent oscillator is trying to cross over going up. Hasn't done so strongly yet. We see a big green up candle actually moving above where that down movement was on the big down week back on the 9th, but hasn't happened yet. Was down for the day. As we plug in a little deeper, we see now we do have a crossover going up for the candle on the 27th ending. That is a 2-day candle. We do have a confirmed crossover going up on the 2-day chart. So what has to happen for the weekly to cross over going up? First, the 2-day chart has to. They can sometimes cross at the same time. But as we look again at our 4-hour chart, pay close attention. Had a red open box candle in the morning and a solid red down candle in the afternoon, even with that 2-day chart crossing over going up. So again, keep your eye. If it's a strong down day on Wednesday, it will pull that 2-day chart back over going down at the same time that 4-hour chart crosses over going down. And that's a good time. If you have that big a change in momentum, and that's an if, then of course be willing to jump in on a down trade. That is an inverse play. Something like QID, there's multiple. And again, listen to our training on inverse ETFs, how to make money when markets crash. You can, of course, buy a put to short the market, or you can buy an inverse fund. And again, when we say buy, we're not talking about real money. We're not a stock calling service. We're an education firm. We want you to do that virtually. And we have trade worksheets available for you, along with weekly market worksheets and daily market worksheets available to our subscribers. So go to chartingwealth.com and become a subscriber. You'll get PDFs on all that information. Plus, we have great training at the website and at our YouTube channel on how to use the daily, the weekly, and the trade worksheets. Okay, that's the 4-hour chart on the Qs. We're going to now move along quickly to 20-year bonds. Of course, we had that weekly vertical crossover going down. Brilliantly profitable back on the 5th of January. And of course, we had 7 weeks of strong down movement. We've now pushed through with up movement on that weekly chart, even though it was a down day. Wasn't much of a down day, 0.14%. That's not 1.4, that's 0.14%. And we see the derivative oscillator losing down momentum. Price percent oscillator still headed down strongly on that weekly chart. As we look at the 2-day, what do we see? Well, of course, the 2-day chart has been broken also. On the 2-day chart itself, derivative oscillators getting close to crossing over positive. So far, you've got a green spinning top, an open box, which is a strong, which again is more indicative of strong upward movement. But again, with an open box that small, it's really a spinning top, portends more sort of indecision tending up. Derivative oscillator is headed toward the red signal line, but it has not crossed going up. Like we said, derivative oscillator getting close to that. Let's tune in a little deeper, take a look at the 4-hour chart. What's it doing? Price movement's moving over, but the price percent oscillator is still headed up. Derivative oscillator is flat, so keep your eye on the price. If you do see a crossover going down on the 4-hour chart, again, going to have to be some real down movement to pull that over after the strong up movement over a day and a half prior. Keep your eye on it. If you do see a crossover going down and you've not already entered into that down movement on 20-year bonds, you might have a jumping in point. Okay, last chart. Back to the weekly. Gold down 1.04%. Looks like the weekly chart is heading toward, hasn't happened yet, but heading toward a crossover going down. Derivative oscillators losing energy. We see down candlestick, and we see the price percent oscillator heading down. As we tune a little deeper into that 2-day chart, we can see, of course, it already crossed over going down back on the 7th, went down for two 2-day periods, of course 4 days, up then for 4 days, and then down so far for 6 days. We've gone ahead and drawn ourselves a trend line heading down. Of course, we're bisecting the up line on the weekly chart, and we see the derivative oscillator heading down strongly, price percent oscillator heading down. And when we look at the 4-hour chart, what do we see? Well, we at least see the 4-hour chart working better. It had crossed over going down, and then it really just run flat and a little up on us. Now it's crossing over going back down again, which is nice to see in that at least we're getting some trending, and maybe this 4-hour chart will start working for us a little better. But again, what do we have? We have the 4-hour chart heading down. We see that we have that 2-day chart in a confirmed down move. But of course, the problem with gold, if you're trying to use our typical charting method, is we still have the weekly chart in a confirmed up move. So until that crosses over going down, the only thing you can do is hope that that 4-hour chart will start working again soon as a total trading chart. When it works, as you all know, it is beautiful. It works so well through most of 2017, gotten off, well, it started off sort of nice with the new year and then sort of got sloppy. So we'll continue to keep our eye on things. We'll let you know as this continues to develop. Thank you so much, my friends. Please make sure to take advantage of all that top-notch training that we've talked about on this podcast. We want you to enjoy that. That stuff is still free, and it is worth its weight in gold. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.